Good evening, future Maryland homebuyers. Thank you so much for being here. My name is Jackie Muick, Advocacy and Communications Admin for Maryland Realtors. I want to welcome you to your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us is our very own Director of Advocacy and Public Policy, Lisa May, Sam Boone, our local realtor from Keller Williams Flagship, Lori Wilson from Ameris Bank, and Jim Hall from Freddie Mac. Tonight, you'll get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all attendees after the conclusion of the webinar. We encourage your questions and we look forward to answering them. Please post all questions in the Q&A box below at the bottom of your Zoom screen. And with that, I'll turn it over to our Director of Advocacy and Public Policy, Lisa May. Take it away.
Jackie, thank you so much. And thank you to everyone for joining us tonight. It's hot out there, so isn't it better to just spend the evening in the air conditioning here with us, learning about how you are going to move into your first Maryland home. So thank you. Again, like Jackie said, please put your questions into the Q&A box. Our experts are here. They are here specifically for you. So if there is something that you have questions or concerns about, something we didn't cover, put it in the Q&A, because this is your chance to have your question answered by a real estate expert. I'm not going to waste any time. I'm going to get us right into our presentation. And that starts with our realtor, Samantha Boone. As was mentioned, Sam is with Keller Williams Flagship of Maryland in Millersville. She is also a certified real estate negotiation expert. And that is what our buyers need to navigate the ins and outs of today's real estate market. So Sam, talk to us. What is home buying like today in Maryland?
So home buying in Maryland, really what we're seeing is an increase in, I'm sorry, I'm just putting up my screen now.
We've got it.
Okay, you got it. Great. We're definitely seeing an uptick in inventory for buyers, which is great because now for the first time in the last few years, buyers have the opportunity to be a little bit more choosy than they have in the past. So I was going to go over the process of buying a home. If anybody has any questions, I'm happy to answer them. Please just put it in the chat, and I will do my best to answer it as I receive them. So when buying a home, the first step you really want to take is to engage with a realtor and conduct your interviews. It's really important for a home buyer to interview their realtors. Sometimes like 3 could be a good number. But of course, if the first person that you meet is a good fit, then that's okay too. I always think it's a great idea to check out realtors' testimonials, their track record of sales, their website, just to get a feel for if they actually are in the market. It's really important with our fast changing market in Maryland to know that you're working with somebody that has a really good beat on exactly what's happening today, not necessarily 6 months ago or 5 years ago. The next step is to review your agency agreement. Once you're comfortable with that realtor, they should be able to go over that agency agreement with you so you can formally hire them and they can advise you and represent you through the entire process. It's really important to make sure that you read everything that you sign, not just the little headlines. And if you have any questions about that, they should be able to answer anything within that agreement. The next step is to obtain the pre-approval. That's a really, really important part of the process, and our lender partners are going to be able to go through that process with you. However, I did want to mention a few things. If you're interviewing mortgage loan officers, it's not just important to look at the interest rate. It's really important to look at all the costs and fees, but also making sure that the mortgage lender is going to answer all of your questions, help you understand the difference between your down payment and your cash to close, explain the whole process and what to expect. So once you have that pre-approval process and your mortgage lender has given you the range that you are able to purchase, and it's really important to also remember that you don't have to go to that top number right off the bat. It's important to really look at what your comfortable payment is. If your monthly mortgage or current rent $2,000, and how do you feel about that? So it's really important to make sure that you're comfortable with whatever price point you're looking in. Another thing that's really important when you're analyzing your needs is to make sure that you are looking in areas that you're going to be comfortable commuting to work every day. Are there any target areas you're specifically looking for? Types of home? Most buyers don't necessarily think of it this way, but when you're buying a house, you're not just purchasing a home, you're actually buying a lifestyle. So do you want your lifestyle to be very walkable or in a city area, or are you hoping to be in more of a rural area? Those are other things that you would want to consider when looking for your next home and evaluating where you should be looking. So once you evaluate what you're looking for, hiring a realtor, going through the mortgage pre-approval process, that next step is to start looking at properties. You can go to open houses, you can schedule private showings with your realtor. New construction is booming right now. I think last time I checked, about 20% of contracts are for new construction. So that once you find a home, it's really important to have your agent also look at the market to see what other comparable homes are selling for. So when you are writing an offer to present to the seller, it's very competitive for the market. What does that mean? When looking to write an offer, you don't want to just offer necessarily what the seller's asking for. You also just don't want to offer shoot for the stars, way over. You want to make sure you're very comfortable with the offer that you're writing and making sure that it makes sense for that specific house, because no two houses are the same. Once you have that offer in and it's accepted, because every offer is going to be different, I won't get into the details of that. And you and the seller have agreed on all of the terms, and that's when you're under contract. And once you're under contract, that's when you're going to have that earnest money deposit that is due. Typically can range from really like nothing to any certain amount. And that's something that you and your realtor can talk about when you are putting together your offer. The next step is to formally apply for the loan. So once you have that contract accepted, you can go ahead and send that to your mortgage lender and they can prepare your formal loan application. And while that is happening, you will also be interviewing title companies. It's important to get some quotes, not just pick the first title company that you find on Google. They all offer different rates and different accommodations for buyers. So it's really important to make sure that you're doing your research. As the consumer, I think it really needs to be mentioned that you have the right to not only choose your own title company, your own realtor, your own mortgage lender, but you have the right to choose your own home inspector. Anybody throughout this process, you have the right to choose your service provider. Realtors, lenders, we can always give you recommendations, but of course it's always up to you. And it's really important for you to want to do your research. There's a lot of talk in the news right now that's stating you have to waive home inspections and appraisals and pay way over asking price just to get your offer accepted. And that's not necessarily the case. Here in Central Maryland, we are seeing some homes go for way over asking price with some contingencies waived, but a lot of home buyers are starting to see that they're able to get some closing cost assistance to help with your cash due at closing. We are seeing more and more home inspections being able to negotiate repairs and credits. So I wouldn't necessarily just listen to what people are posting on Facebook or on the news, because it's very, very localized, and that specific type of property and that specific price point that you're looking in. So that's something else that your lender and realtor can help you with. So once you get past choosing a title company, formally applying for a loan, you also are going to have your home inspection shortly thereafter. And at that point, that's when you would be able to negotiate those repairs and or credit. You're also going to be going through the mortgage process while that's happening. Your loan's going to go through underwriting a few times. And little known fact, the lender's going to order the appraisal. A lot of home buyers think that the appraisal and the home inspection are actually the same thing, which isn't necessarily true. The appraisal is actually the lender doing their due diligence on the property, where the home inspection is really the buyer's due diligence on the property and how it works, and really familiarizing yourself with how the home works, the age and life expectancy, just to get a real feel for how this house sits today, where the appraisal is going to tell you what the appraiser's evaluation for the value of the home and whether or not they can insure the house with the type of loan that you have, with the down payment that you have set up with your mortgage lender. So a couple of out-of-pocket expenses that aren't something that you are necessarily going to discuss up front when getting your pre-approval letter are your earnest money deposit that is due right after you go under contract, which does go towards, of course, your cash to close when you buy a home, your inspection costs, because each house is going to be different, septic inspections or fireplace inspections. Not all houses have those. So there's a bunch of different inspections that you can get, and they all have different fees associated with them. And then most of the time you will also be paying for your home appraisal out of pocket before settlement. So that's not typically counted into your cash to close. Once you go through that whole process, that's when you're going to do your final walkthrough or your re-inspection of the property. At that point, that's when you will be scheduling your settlement, if everything goes well, and taking possession of your new home. And that's all I have.
Sam, thank you. And I think everyone here could see on this process that Sam started with talking to a realtor and talking to a lender before looking at homes. And Sam, it's so tempting, like looking at homes. That's the fun part. That's the part we want to do first. But what's the danger in looking at homes, falling in love with the home before you've taken those other steps to talk to real estate professionals?
There's so many, so many. Just to name a few is falling in love with a house and setting your expectations to only be on that home, where you can't necessarily buy it without, well, you can buy it without representation, but you can't buy it without having your financing straight. It's really the biggest pitfall, I would say, is probably not having your expectations set properly. There's a lot that goes into it. And I just went through the whole process of buying a home, but each house is different, and each contract is different. You don't know if what's going to pop up throughout the process. If the house has an HOA, what do you do? It's really important to have those expectations set up front before you go into a legally binding contract to purchase your first home.
Yeah. And I mean, like, I'm a competitive person at heart, and the thought of trying to get into a really competitive market against someone who already has their realtor in place, who already has that mortgage pre-approval, they're ready to pounce on that house immediately. And it would just kill me to know that I was not as prepared as I could have been. And that's why I lost out on that house that I really wanted. Sam, you also mentioned, choosing the right realtor for you. And there are a whole lot of them out there, right? I mean, there are tens of thousands of realtors in Maryland. So what goes into finding, the right one and the right fit? What, how does that go, and where should people look to find those realtors who are going to be the right fit for them?
Well, most people find their realtor through referrals or word of mouth. That is probably going to be the best way to find a great realtor. If your friends had a great experience or multiple great experiences with a realtor, well, success leaves clues. You're more likely to have a great experience as well. But there are also a bunch of different communication styles and personalities. And I know I'm not everybody's cup of tea, and somebody down the street may not be somebody that's my cup of tea's flavor, whatever the saying is. So I think it's really important to make sure that your realtor is not only a personality and a communication fit, but to make sure that they have that track record. So if you get that referral from word of mouth from your friend, I would also then Google them. Check out how many houses have they sold, and recently how many houses have they sold? Are they in your area? Local. It's super important for your realtor in this competitive market to have a beat on your local market.
Wonderful. Thank you. Well, guys, don't be shy, please. If you have any questions, use that Q&A feature. If you think of something in a couple of minutes, not a problem. Sam's going to hang around with us. We can always circle back and get your questions answered. But for now, I want to turn it over to Lori Wilson. She's a mortgage broker with Ameris Bank in Bowie, and she's actually doing double duty for us here tonight. She's going to talk about the mortgage approval process and also give you an introduction to some very, very cool mortgage products, some of which through the Maryland Mortgage Program are only available to Maryland buyers. So, Lori, I'm going to pull up your presentation right, and we'll get started.
Good evening, everybody. My name is Lori Wilson. I've been in mortgage banking since 1984. Long time. I saw rates at their peak high in the 15s and 16s. And I just find that it's very important for buyers to make sure that they are getting pre-qualified right at the beginning. And with that being pre-qualified, is the most important thing is credit score and cash. So I'm going to talk, I wanted to bullet point those and talk about credit scores, and then we're going to go into cash, and then we're going to talk about how to get you some cash from the state of Maryland, from our internal programs, from some other programs that are available throughout the counties and states, just so that you know all of this is available. And Sam and Lisa both touched on it. You really should find out who's going to fit you. People do business with people. In a lot of senses, they don't do business with a brand, but they meet somebody and feel that they're going to be the one. And if you can find a team of people that are going to get you into a home, that is the most important thing. It is very important for you to understand that renting is a temporary thing. Just like putting stuff on credit cards is a temporary thing. Don't leave it on the credit card. You want to get into a property right away. Everybody should have the ability to buy, whether you're credit challenged, cash challenged, income challenged. You need to have somebody in your corner that can direct you, give you that mortgage roadmap to get you into a property so that you're not paying somebody else's mortgage. So let's start with credit, and we can go to the next slide. The credit scores are made up of these 5 bullet points, and I'm going to touch on each bullet point very quickly so we can get into the stuff that people really want to talk about. But understand that your credit score will open up lots of different programs for you. The higher your scores are, the more programs you're going to get. And the more programs you have, the more options for properties. Whereas if you can go into a property that may need conventional versus FHA versus VA, you understand that your rates, your mortgage insurance will always be better the higher your score is. Credit scores are made up of payment history, balances carried, credit history, not payment history, and mix of accounts and inquiries. We can go to the next screen. Payment history is actually paying your bills on time, the most important thing. And a little nugget that you should know, because I've been doing this a long time, is that a bankruptcy that you had 2 years ago, which you can buy after a bankruptcy after 2 years, but a bankruptcy 2 years ago will hurt your credit less than a credit card late last month. You have to pay your bills on time. If you are late on a credit card, let's say it's even a $10 credit card, because I get it all the time. It was just a $10 credit card. That will hurt your score 10 points. And there's no way around bumping your score up after a late. So keep in mind that setting up automatic payments, making sure you're at least getting those minimums out to your credit cards is very, very important, because your weight is based on your history of paying those bills. Balances carried is very much that. If you've got 6 credit cards and they're all maxed, your score will be low. If they're all the minimum, then your score will be much higher. Keeping in mind that newer cards are going to hurt your score more than a card that you've had a long time. You should really only keep 10 to 20% balance on your credit cards, and understand that multiple new loans, again, will hurt your credit. So you need to season them. So keep your balances low and keep everything paid on time. Your 2 biggest score movers. If you can keep that in mind, it's very important. And what a little nugget on credit cards is, credit cards are for convenience. CC, credit card convenience. You don't use a credit card to buy something on sale, because then if you bought it on sale and you left it on your credit card, you're ending up paying 3 times more for it. So you don't want to do that. You want to use it so that you don't have to carry hundreds of dollars in your pocket. You charge, you pay it off. You charge, you pay it off. If you leave it on there, you're paying 18%, 20%, 30% interest on your groceries, on your gas. So you're paying double for everything that's already overpriced anyway. You don't want to leave your balances on your credit cards. Bottom line, next score. Credit length. This is what I was mentioning to you about newer credit versus older credit. You know how credit card companies send you cards and they say, move all your credit cards over to this card. It's a 0% interest for 6 months. Close all those old cards that have 15, 16. If you do that, your scores will drop. You don't want to close credit cards. Closing a credit card is automatically going to drop your score. The reason that is because the more credit you have available to you, the higher your score is. So like I said earlier, if you have 5 cards and they all have low balances on them, you've got hundreds of dollars available to you in credit. But if you maxed them all, you have 0 amount of money available to you in credit. So having those credit lengths that are older, like a 2020 credit card versus a 2024 credit card open, it's very important that you have that history with the creditors. And if a credit card company closes a card on you, it's the same as you closing the card. So you want to keep them open. Even if a card sends you something and says, you haven't used us in a while, we're going to close you out. It's better for your credit to just charge $5 and let them keep it on there for another year, as far as your credit score goes. These are just little nuggets that you can keep in mind. And always remember, I have people call me and they'll say, oh, I fixed my credit. And immediately my head hits the desk, because they don't know what they don't know. They think they know it, but they don't know it. So you need to talk to a professional that can tell you what will do to make your score rise. And the last thing that I'm going to go over regarding credit, and then I'll give you a couple little nuggets, is inquiries. Inquiries is always one of those things that people ask me about. Look, John Doe just pulled my credit to buy a mortgage. I heard you have this product. I don't want you to run my credit. You need to have mortgage companies run your credit in order for them to give you the most accurate information. That's 1. 2, I believe you should always shop. All of the banks in the area do not have the same products. They don't have the same rates. They don't have the same flexibilities. And they don't have the same personalities. You might like me versus John Snell, and you might like John Snell over me. But at the bottom line, we are the nosiest of all of the people you're going to deal with in your team, and you need to like us. And liking us means that you understand that we're going to put the best thing we can on the table based on your criteria. So understand with the inquiries, all mortgage inquiries within a 30-day period only hit your credit score once. I get people call me and say, you ran my credit, you said it wouldn't hurt my credit, and it changed 4 points. Well, if I put the report next to each other, you had a pair of jeans that hit your credit card between their pull and my pull. So there's always something, but it's not the mortgage pulls. It's only going to hit your score once. So understand that it's very important for you to note that. The last thing I'm going to say, do not, and I know this is beyond what most people will tell you, do not pay off judgments and collections until you talk to a lender about it. And the reason that is because a lot of judgments and collections sit on your credit report for sometimes years. And when you pay them off, it automatically reflects as a 2024 paid account, paid delinquent account, rather than an account that became judgment in 2020 or 2021. So as soon as you pay it off, it looks like you just had a judgment in 2024. We can pay those at closing. We can include them in your closing cost. So keep that in mind and let a professional tell you. If they tell you it needs to be paid, and they should know. But understand, it's very important to understand that. Also, student loans, each program, and the better your scores are, will determine what we have to count against you for student loans. So if you have student loans, I get a lot of people, I've got 200,000 in student loans, I can't buy a house. That is definitely fictitious. You can definitely talk to somebody that can tell you how you don't have to wait if you have high student loan debt. And last thing, but not least, is do not dispute people on your credit report. If you're disputing a creditor on your credit report, it's just disputing creditors. Guess what? We're a creditor. We don't want to know that you're fighting with a bank about a credit card debt. It's either yours or it's not yours. It either gets removed or it gets paid. Do not dispute it, because we have to have disputes removed and it just takes time. We can go to the next score. And please put your messages or questions in the chat box. I'm happy to answer them. So I'm going to talk about some down payment assistance, and I'm going to talk about ours. I'm going to talk some of the counties. I'm going to talk about the Maryland Mortgage Program. And I do talk fast. So again, if you have questions, stick them in the chat box. We at Ameris Bank have a down payment program called the Ameris DPA. It is 4% of the purchase price up to $12,500. This program is, we can do it as low as 3% down. So if you get 3% down, do the math, and we're giving you 4%, it's like getting 101% financing. It's a conventional loan program with lower than normal mortgage insurance and lower than mortgage normal rates. It's running about 6.3 right now on a basic rate on a 30-year fixed. And again, the higher your credit scores are, the lower your mortgage insurance. It does have income requirements that we have to look up for you. It does have one of the buyers. So if you have a husband and wife and one of them is a first-time home buyer, they can get the product. Only one person on the loan has to be a first-time home buyer. You only need to put $500 of your own funds in it, and it is forgivable after 5 years. We go down to a 640 credit score and up to a 50 debt to income ratio. And debt to income is your income times 50%. That's how much debt you can have between your new house payment and other loans. We can go to the next screen. The Ameris HEE program is basically the one that I just told you about, but on steroids. This one is a 4% purchase price, so up to $12,500. There is no income limits on it. It has to do with where you currently live. It gives you $5,000. That's forgiven at the table, so it's a gift from us. We also give you a $500 credit towards the appraisal. We also give you a $500 credit towards a home warranty. And it's a 3% down program. You can do more, but it's 3% minimum. And as long as the borrower lives in an area that's approved, and it's where they live now. So they could be living in Prince George's County and buying in Florida, and we can do the loan. We're approved in 47 states. And like I said, the minimum score is 640. This is we are killing this program right now. It is very, very popular because it's totally forgivable. The $5,000 is forgiven at closing. The $7,500 is forgiven, $1,500 per year up to 5 years. So if you decide to refinance it, the longer you have the loan, the less that you'll need to pay back to us. And then after 5 years, you don't own any of the $13,500 we're giving you. And I say 13,000 not to confuse you, but we're giving you 12,500 plus we're giving you $1,000 in credits towards other stuff. So that's a very big one. Please reach out to me regarding that and the other and all of these. Next slide, Lisa. Thanks. The Federal Home Loan Bank of Atlanta has some down payment assistance. It is for first-time home buyers. A first-time home buyer, which I didn't mention earlier, is anybody that hasn't owned a property in the last 3 years. So if you haven't owned a property in the last 3 years, you sold 3 years ago, you foreclosed 3 years ago, you did something 3 years ago, as long as you haven't had a property in your name in the last 3 years, you can get Federal Home Loan Bank of Atlanta loans. This program gives up to $15,000 in closing cost assistance. You do have to have a minimum contribution of $1,000, and it's on all programs, FHA, VA, USDA, and there's no restrictions on where the property is located. Maryland, DC, Virginia, we can do the loan. It does have minimum credit scores, but they're really minimum credit scores based on the program. So for instance, if I get your FHA loan approved and you have a 600 credit score, FHLB will give you the down payment assistance as long as your income meets the criteria. Now, I'm going to add a little bit to this. FHLB comes in and out of the market with money. Currently, we don't have any money with FHLB, but they are due to come back out with some money for FHLB. This is one of the reasons you should get pre-qualified and be in the system. So when the money comes out, we hop on it like a bunny, and it's yours. Next slide, Lisa. Maryland Mortgage Program. Now you can see there's a lot of words on here. And there is a lot of information that I'm going to go over with you on this. Can we go to the next slide real quick? I think it's the rate sheet. Nope, go back. So the Maryland Mortgage, I thought I put a rate sheet in here. I may have, but I probably didn't. The Maryland Mortgage Program has an abundance of programs. They are income based. And I can tell you the income on these programs is very high. Depending on what county you're in, Maryland, Montgomery, Prince George's, Charles, normally runs about $164,000 for a household income. Anne Arundel, Howard runs about $130,000 for household income. But this program will give you up to 6% in down payment assistance, as well as it can give you perks. If you are a state of Maryland employee, you can get an extra $2,500. If you're looking for to pay off some student loan debt, currently, and actually this is an outdated slide that says $50,000. They give $30,000 to pay off student loan debt, which also can come with down payment assistance. What's good about that is that if you only have a small amount of student loan debt left and we can pay it off with the loan, it'll help you qualify for more home. So this is a very important feature on the Smart Buy program. The other portion of it is all Maryland Mortgage Program do not require you to be a first-time home buyer. They have some programs that are called Flex, and on the Flex programs, you do not have to be a first-time home buyer. So again, as I'm rambling, which I do, there's a lot of information that I'm providing that will, once you apply, we narrow it down to you. Well, you can only, if you have VA, you want to go VA. If your scores aren't quite high enough for conventional, you want to go FHA. But the reason that it's important to apply is that we don't confuse you talking about programs that may not just fit your qualifications. We can narrow it down and then say, okay, you only qualify for FHA, but we can do FHA Maryland Mortgage Program. We can do FHA, FHLB. We can do FHA 203K, which is a renovation portion of FHA. So just keep in mind, that's one of the big things that your realtor will stress: get approved. See what you need in cash to close. See how much money we can get you in down payment assistance. See if you can get a gift from a relative. There's just so many things that you can do. But the bottom line is that you don't want to be renting. So we need to keep moving you into that realtor perspective mindset. The Maryland Mortgage Program also has a partner match program, whereas if your employer will pay towards your closing cost, you can get additional closing cost on top of the other programs that they offer you. And if your employer is not signed up, it's a very short form. So if they say to you, if they'll give you as little as $500, so let's say in their HR department, they say, we're going to give anybody that wants to buy a house that works for our company $500 to buy a house, the state of Maryland will match it. It's called a partner match. So this money can be combined with other programs within the Maryland Mortgage Program. So keep that in mind, again, when you're trying to understand and do my job, which, oh, I think I can do this, I think I can do that. Just ask, because that's what we're here for. And everybody is pretty familiar with, you know, the way that they work. And once you apply, we run it through the system and it'll kick out everything that's available to you. The last one that I want to bring up is the home mobility. This one ran out of money for a while and just came back in, and it is a very good program. This one is up to, and I might be wrong, I'm going to guess. I think it's $40,000. I'm going to check. $40,000 to be used to purchase a house if you have a disability. But not only if you have a disability, if you have a child that has a disability, or you're living with a relative or a parent that's got a disability. That is a lot of money to be used towards the purchase of a home. It's called the home mobility product. The rates are very good on this product, and it does help you. Putting that kind of money down removes mortgage insurance, which could limit your cash for your buying power. So keep that in mind on this program, because the home mobility is available, again, not just for your buyer, but if you're a buyer who is caring for somebody with a disability. So, and it could be as little as, you know, you're receiving Social Security benefits for disability, or you have a child that receives disability benefits, or a parent that's receiving disability Social Security benefits. So a lot of different things. We get all of the paperwork together and send it out to them. That's fine, Lisa. You can switch to the next one. Let me see if I'm running out. Oh, I'm good. So the pathway to purchase is a loan that goes with Prince George's County. I just settled 2 of these. The Prince George's County, and you know, if you're looking in that area, offers $25,000 to purchase a property for down payment and closing cost. It is, you do have to take an 8-hour course, but it can be taken online. And most of the first-time home buyer classes have to take some sort of a class, but most of the classes are on line. You can get, it's a 0% interest deferred loan for 10 years. After 10 years, it's forgiven. You can purchase any property in Prince George's County. You do have to be a first-time home buyer, which is anybody that hasn't owned for the last 3 years. And you have to keep in mind that there's a separate inspection. So Sam was mentioning appraisal is different than a home warrant, a home inspection, which they are 2 totally different things needed for totally different processes. But the pathway to purchase requires their own internal HQS inspection, and anything on that inspection would have to be completed by the seller. But you know, the bright side of that is $25,000. Who doesn't want $25,000? So if we can negotiate this product for a property that you might be purchasing in this county, then you may want to consider the pathway to purchase as something that will, you know, get you to where you want to be. Next slide. So I'm going to just wrap up with a few little caveats and then answer any questions you might have. But there are things that you, like I said, you think you know, but you don't know, which you should probably talk to a professional to find out. Because the Prince George's County teachers get incentives, police officers get incentives. These are all things that could be taken off your transfer taxes if you find out from the title company. All you do is, once you apply, those incentives can be brought to you through the title work, maybe a 1/4% off of because you're a police officer, or a 1/4 off because you're a teacher. 203K, which is a renovation product. We can do credit rescoring. So never believe that you can't buy a house unless you're putting yourself in the position to get there, and by talking to the right people, because it's really important, and everybody on the panel can tell you the direction you need to go to get there. And rents are not stable, especially now with the housing market shortage. Sellers want to sell their properties. They don't want to continue to rent them because they can get top dollar for them. So your next lease renewal, maybe you have to move, and we'd like to be there to help you. Thank you, everybody, for your time, and let me know if you have any questions.
Well, we do. So let's dive right in. Let's start first, because you started with credit, and the importance of it and how to keep that credit score as high as possible. So when you talked about not disputing incorrect information, is there a difference there between disputing it directly with the merchant versus disputing it through the credit reporting agency and disputing it through your credit report? Or do we still just want to talk to your lender before you do anything?
Yeah, you definitely want to talk to a lender, but if you've already disputed something, if you dispute it with the credit bureau, it's going to show up on your credit report. And if you dispute it with the creditor, not the credit bureau, it's going to show up on your credit report. So, and the disputes, when you dispute an account, some people dispute accounts that are perfectly good accounts. They might dispute a charge that they got remedied, but the dispute's still sitting there. And when you dispute an account, it takes it out of the credit module. So when it takes it out of the credit module, it's not really a true picture of what the credit score is. So that's the reason we have to have disputes removed.
All right. And then you mentioned that, even with a bankruptcy, you can still purchase a home. Well, let's say your bankruptcy was only a year ago, not 2 years ago. Would that person still need to wait another year, or is it all just kind of dependent upon a number of factors?
There's a few factors. If it's a Chapter 7, 2 years is the minimum that I'm aware of. There may be some outside lenders. Remember, I don't do everything, but I do a lot, that may do. So I don't want you to walk away saying, okay, well, after 1 year, I need to wait 2 years. If it's a Chapter 13, that's a totally different ball. You can do it after a year. You have to get trustee approval, because the trustee is organizing the repayment of the Chapter 13. As long as you've been paying on the 13 for 12 months and the trustee approves you purchasing a home and everything else pans out, of course, then you can purchase after 1 year.
Great, thank you. Now, in terms of your Ameris loan products, can those be laddered with, say, local programs, whether it's Prince George's County or Buy Back the Block in Baltimore City or any other county
Yes.
or nonprofit down payment?
Yes. So as long as we are in second position, we actually just did one that had 4 down payment programs on it, and ours was the first. The rest of them were in Baltimore. We did Live Where You Work and Baltimore Keys and FHLB. So there was 4 down payment assistance on one. So, and FHLB and the our Ameris are pretty popular together, although the FHLB ran out, but we can do them. Maryland Mortgage Program will not, we can't go behind Maryland Mortgage Program, and here's why. Maryland Mortgage Program and Ameris both require to be in second position. So anybody that will take a third position, we can put behind our Ameris loan.
Wonderful. That's impressive. 4
Yeah.
down payment program. That's
Yeah.
wow. Wow, that's a lot of money. Okay. So speaking of programs, so if there's a process to go through to see what programs are available. Well, what if you want one that, say, your lender doesn't have, or there are some loan programs that differ based upon who your lender is, correct?
Correct. Yeah. So, I mean, like I said, that's why you should always shop around, and that's why the inquiries don't hurt you, because, and some banks may have all of the programs, but you may talk to a lender, a loan officer that may not be familiar with the loan programs. So it doesn't necessarily mean that it's not there. It might be there, but the programs are, like Maryland Mortgage Program has a list of lenders that they work with. Our program is just specifically for Ameris. It's not going to be for any other bank is going to have that program. Pathway to Purchase, anybody can do that program. So it really depends on who you talk to. But again, I mean, I might be able to do a Pathway to Purchase at a 620 credit score, and somebody else may be able to do it at a 580. So you want to make sure you're shopping to make sure you're getting the right deal. But sometimes you may get on the phone with somebody and you're like, I'm not working with them. It's just a personality thing, but it's also a where you need to be as far as, I need this money. Can I make it work? Can we get there? And even if we were to come back and say, we can get you, $13,000 in down payment assistance, but you're going to need another 8, we will ride the ride with you until we get there, whether it be savings or your tax refund or gift. Will help you navigate it.
Right. And a good reason to have that conversation with your lender too is they will look at all of your qualifications and say, look, I know you really wanted this program, but actually I can get you these too, and they're better for you and your situation, and
Correct.
actually give you more money than you thought. So
Correct. And some may be just a rate. like one program may be a higher rate than another, where you'll qualify for one program for more money than the other, but the other one might give you more money. So that's why you have to have the professional look at it and say, okay, here's your scenarios and here's why you would take one over another. And then you need to make a decision. But, you know, if one's a little bit higher rate, but it gets you in for $5,000 less, again, you need to be buying and not renting. So you get in, and then we, you know, it's one of those, you know, you date the rate, marry the house thing, and we refinance it later.
Great. And then we have two more questions kind of about those Maryland Mortgage Program products. The first being student loans. So, you know, right now, if your student loan payments are zero, you know, maybe they're in a deferral, or maybe it's an income-based repayment, or you know, nothing's due right now. How does that impact either your qualification for the Smart Buy, or how does that impact your mortgage loan approval on another product?
Well, for the Smart Buy in particular, the Smart Buy comes in a conventional form. So it doesn't come in FHA. So you would be privy to whatever your student loan payment is based on Fannie Mae or Freddie Mac's criteria for the program. So Freddie Mac requires you to use 0.5% of the balance. So if you have $100,000, we would use $500 a month. But if you're in an income-based repayment plan, we would use the income-based repayment payment. So if their income is lower, they might only be paying $200 a month on that $100,000. Then we can use that. If they're in deferment, no matter what, if it's in a no payment situation, we have to use 0.5% on that product. On Fannie Mae, you have to count 1% of the balance. So that would be $1,000 unless they're in an income-based repayment. And FHA is 0.5%. So if you're in an income-based repayment and we have a payment for all the student loans, that's what we're using. If they're not in an income-based repayment and it's in deferment or forbearance, we're going to use either 0.5% or 1% towards the qualifications. And that's basically standard across the board.
Gotcha. Very good information. And then you mentioned on home mobility, to qualify for that, does the disability have to be supported by Social Security, or was that just one example?
That was just one example.
Okay.
I mean, you could have a doctor's note that says you're 100% disabled, and we can use that. We just have to send it up for prior approval. But I just had one like that. Yeah.
Great. And then finally, these programs are some of them only available for certain types of homes, like, you know, new construction versus existing homes, or townhouses, single family homes, or do they get that specific?
They do. You can't do a renovation on the products. It would have to be a standard single family. It can be new construction as long as the new construction is in a specific area, and they have maps. So you would tell us what the area is, the property was located, and as long as it's in that targeted area, you can do the Maryland Mortgage Program on it. Now that's just for Maryland Mortgage Program. For ours, you can do any property and townhouse condo, as long as the condo meets the criteria for the programs too.
All right. Again, another plug for talking to that mortgage lender about your specific needs and your specific situation. Well, Lori, you have been a trooper for us, giving us all this great information and handling all of these questions. So thank you so much. We will, of course, share Lori's slides along with Sam's and those of our other presenters, and send those out to you as soon as we're done, because I know that our attendees tonight will probably want to revisit those.
Okay.
But now we're going to hand it over to our returning champion, our final presenter of the evening, Jim Hall with Freddie Mac. And, you know, tonight we've talked about the importance of credit, and we have talked about using homebuyer education and homeowner counseling to get you some of those down payment programs that are available out there. And Jim can actually kind of help you with both of those. So Jim, I'm going to turn it over to you.
Yeah, well, thank you, Lisa. It's always great to, partake in these webinars. Maryland Realtors and yourself are doing a great service for the citizens of Maryland. You're providing free education, and what Sam and Lori were talking about tonight is just invaluable for everybody on the line. So I really applaud everybody for tuning in tonight. You're really getting a great education on the home buying process. And it's been said earlier that your realtor and your loan originator are the two most important people within the home buying and the mortgage application process. So again, it's great that you've tuned in tonight. Now, I'm Jim Hall. I'm with Freddie Mac, and you may have heard of Freddie Mac. We are a mortgage company. We're not some Irish guy named Frederick McGillicuddy. Okay, we're a true company. And you may be asking, okay, why do you have two mortgage companies on this webinar? Now, we don't make loans directly to the public like Ameris Bank and Lori do. Okay, so we're not in competition with Lori. We're in the secondary mortgage market. So what that means is we create mortgage programs for our business partners like Ameris Bank and the Maryland Mortgage Program to use and, to actually offer to consumers like yourselves. And then what we do when Lori makes the loan and her bank is ready to move the asset and sell it, they sell conventional loans to Freddie Mac. So what we do is then we provide the liquidity to keep the lending cycle going. And we also, like I mentioned, we create mortgage programs for our business partners to use. And the one that the Maryland Mortgage Program uses is the HFA Advantage, and that's only 3% down. So there is a myth out there that on conventional loans that you need 20% down. And if you're working with a great loan originator like Lori, they would educate you that, you don't have to break the bank and spend all your money and put 20% down. You can only put 3% down and become a homeowner. So again, that's, being educated. And what I'm going to do is share my screen here and talk about our Credit Smart program. So just let me find the slide here. And Lisa, can everyone see it?
We've got it.
All right, great. Now, Credit Smart is our financial education tool, and it's been around for 20 years. And even though I said we don't lend to the public, we do provide information and tools to the public. So this is something that we've created for you to become better educated on the home buying process and the mortgage application process. And as Lisa mentioned, you'll be getting a copy of these slides. So the Credit Smart web address is on the bottom right-hand corner of this. And this program is free to you. It doesn't cost you anything, and it will really help you, understand the process. And then when you're working with a realtor like Sam or a loan originator like Lori, you'll be able to converse with them and really understand what's going on. We enhanced it within the last 2 years to really bring it into the 21st century. And back when this was originated, the industry was different. It was more, a paper-oriented industry, but everything right now is web-based, and it's also very accessible for you. So, after this webinar, I would really highly encourage you to take a look at it and take advantage of it. So what we did, we broke Credit Smart into two sides, the financial capability side and the homeownership education side. Now, the financial capability side, that will help you gain financial knowledge, skills, and habits and confidence in really being able to, understand how to budget and items like that. The homeownership education side, that will get you ready to purchase the house and go through the mortgage application process. So this just gives you a little snapshot on how you can set up your dashboard. You can personalize it, track your progress. It can give you a smart score. You can earn badges. You can set goals, and you can have a notebook to make sure that you're jotting down important information. So again, the essentials part, this is for your whole home ownership journey. And this isn't something that you just sit down and knock out in one night. As you can see, we have multiple modules, within the Credit Smart Essentials site. Now, it helps you to set goals, how to understand earning and spending, being a savvy borrower, planning to save, and preparing and protect. Now, it's really, really critical that you learn how to budget because you know buying a house is just not you know getting that structure. So when you get that, turn that key and you walk in, it, it's a whole different ball game. You have to furnish the house. You have to buy curtains. You have to buy drapes or blinds. There's things for the yard that you're going to need. Lawn mowers, hoses. If you live in a cold environment, maybe a snow blower. So you have to think about all these things and where it's going to fit into your budget. And, while you're also, taking care of your daily needs. And Credit Smart will help you with that. When my wife and I, we bought our first house, back in 1990, I can remember my father saying to me, Jim, you need a rainy day fund. You have to save some money. And I was like, well, what's a rainy day fund, Dad? And he said, well, things are going to happen. You're a homeowner now, and you may need some quick cash. And, he was spot on. Within the first 2 years of our home ownership, I remember my wife and I, we came home and, from a hard day's work, and our basement was flooded. The water heater failed, and our basement was partially finished, so the rugs were destroyed. And so I had some quick cash. I was able to take care of the mess while I put in my claim to my homeowner's insurance company. But these are just items that you have to think about. And I look back, and I think my dad was telling me about the rainy day fund because he didn't want me to come and ask him for money if anything happened. But but that's joking, of course. He was a good man, and he did give me great advice. Um, Now, to prepare and protect, that's really, really critical because you know, this is probably the biggest financial decision you're going to make in your life. And, it's great when you buy that house, you get that mortgage approved, but, we want you to, not have the stress of, making that mortgage payment. So again, budgeting and being prepared will help you protect your asset. And that's where you're going to earn equity throughout the years and hopefully someday pass that down to your heirs through generational wealth. So that was the essential side. Now this is the home buyer use side. Now this is only 6 modules. It shouldn't take you more than 2 hours to do. Again, you don't have to do it all in one sitting. It's available in English and Spanish, and this works you through the home buyer process and the mortgage application process. So when you're done the 6 modules, you do have to pass a test, and you have to achieve 80% or higher. And when you pass that test, you receive a certificate that will show that you completed it, and it meets national industry standards for home ownership education and counseling. And it's good for a year. So if I'm Sam or Lori and you come to me and you show me you went through this process and you passed that test, I know you're ready, A, to buy a house, and B, to get that mortgage approved through me. So again, this doesn't cost you anything. This is all free. To use the old cliche, knowledge is power, and you'll only be a better consumer if you really understand the process. So again, this is Freddie Mac trying to help you by providing you this tool. And with that, I am done. And look at that, Lisa, it's 7:29, and we're gonna
Oh
get it.
my goodness.
We're gonna get out on
Goodness. We couldn't
time
have
tonight.
planned that out better if we tried. Well,
Okay.
Jim, I mean, listen, it's free, it's online. I can go at my own pace and it might put money in my pocket.
Yeah.
Like it sells itself, really. So thank you so much for telling us about Credit Smart and Home Buyer U. And we hope that all of you take advantage of all of the tools and information that you have learned here tonight. I really do want to thank you all for attending. We will be sending out a recording of this along with all of our presenters' information. But on behalf of Sam and Lori and Jim and myself, thank you so much for being here. And of course, to Jackie, our producer. Jackie, is there any final words of wisdom before we let our folks go tonight?
Just want to say again, thank you so much for attending. And as a reminder, our next Your Home Buying Keys webinar is on August 8th, which is also a Thursday from 6:30 to 7:30 p.m. Please share that date with anyone who you think might benefit from this information, or someone you think is going to be a home buyer sometime soon in Maryland. Be sure to check out marylandhomeownership.com for more resources and information on home ownership. I'm sure you're very familiar with that if you're here at this webinar. But we wish you all the success in your journey. And if you have any questions, please email webinar@mdrealtor.org. Have a great night, everyone.
Thank you so much.
Bye, everyone.